Friday, and you'll probably all agree with us that we are more than happy to be done with this week and this month. All three major averages should finish the month in the red, which is not a fun start to the year. Reminds us a lot of a year ago. In fact, the rhetoric we saw in the last 26 days of the month also reminded us of last year. But we have to say that the State of the Union address was a good one. The president even used the word nuclear when talking about viable energy sources. Now, if we could just get him to say the word natural and gas in the same sentence without talking about the effects of eating his groceries from Whole Foods, then we might really get a rally in energy names. We're long Chesepeake as the most levered way to play the future of natural gas. We also like clean energy, symbol CLNE, for their exposure to natural gas filling stations. When times are tough, we like to turn back to our strategic long-term focuses in order to look for things that we can continue to own through the rough times with an eye on better days. There also seems to be quite a bit of negative press coming out of Europe these days, and their banking stocks are certainly hard hit. Although Jim Cramer did warn us about Banco Santander becoming the best house in a bad neighborhood, we'll continue to own this name with its better than 5% dividend as it now trades with a single-digit PE again. You may know that by the ticker with a name as bad as Apple's new device, yep, STD, which is the symbol for the Spanish bank. It's clear that some companies may need to take a little focus on earning money to see how the names they use in the public will be received. You would think both Banco Santander and Apple would have been able to see what a terrible idea these names are to the public. Oh well. Speaking of banks with a single-digit PE in Europe, Barclays, symbol BCS, has a PE of 5.88 and does pay a small dividend. I know I've mentioned it before, but it's worth mentioning again that with $1.4 trillion in cash, they should be able to get through just about anything over there short of nationalization. The Greece situation may be bad, but we don't think it's anywhere near the talk that we had of bank nationalization in our country this time last year. Lastly, we continue to press our luck with the stock Warren Buffett tossed out some time ago, Bank of Ireland, symbol IRE. This really is a speculative play, and it certainly isn't the best house in any neighborhood. But we're willing to make a wager to see where it takes us. The pessimism over European banks is pretty palpable here. One last thing before we go. We're not abandoning our preference for dividend payers this year. One of the markets get nuts and sell off endlessly, which they clearly did in the month of January. We need a reason not to panic and hold on to our stocks with some kind of expectation that we'll actually make money in a rough market. We noticed that our old faithful Calumet Specialty Products, symbol CLMT, slipped back below $20 early this morning at the open. It has since risen back above $20, but consider putting in a limit order and leaving it for, say, 1976. In this environment, take a look at Kimberly-Clark, symbol KMB, below $60, and it will get you a 4% dividend yield. Speaking of yields near 4%, Chevron has been sold off hard, and we really like it down here much closer to $71. The yield at Chevron, symbol CVX, is 3.7%, and we think it's the clear leader out of the super major integrated oil companies. On a pullback below $60 in Boeing, symbol BA, that should get the dividend really close to 3% for you. It's about 2.7%, and we really like Boeing. We had a very nice conversation with them after the conference call. Unlike Wall Street Bean's Easy Pour, Boeing's Investor Relations Department actually returns calls and answers questions. We love our friends at the Wall Street Bean, so for them we'll throw in Life Partners Holdings. They scrutinize life insurance policies, trade with single-digit PE of 9.7 and a dividend of 5%. So there you go, a nice long list of dividend stocks that you can own, which should not only give you a reason to hold on to your stock with the dividend coming to you each quarter, but a reason to buy when your shares decline, especially when they go below your cost basis. We'll throw Honeywell International, ticker HON, into the mix as well. On the decline below $40, the yield is back up to 3%. We felt great about management after this morning's earnings call. Management encouraged those listening to go ahead and place their bets on Honeywell because they're going to deliver better than they did in the last recession. Thanks for tuning in to another edition of Lunch at the Market. Don't forget to keep checking out all the past editions when you have time this weekend on our Magnum Opus Financial branded YouTube channel. You can search YouTube using MO Financial and any ticker you're interested in and see if we've covered it. If we haven't, you can always mention us on Twitter with your stock, and we'll do the research and throw it into the segment. Have a great weekend, and we'll see you on Monday.